We've all seen the headlines, housing market cooling off. But look, in Oklahoma City, that is not the whole story. Homes are moving fast, prices are strong, and public record sales just took an absolute nosedive. So let's cut through the noise and check out the real data backed by the actual numbers. I've got the data sliced into 9 quick snapshots, and we are going to see, where's the momentum? Is it still favoring sellers? Let's jump right in to the June 2025 market report. All right, let's start with the big picture with our overall market trends for the Oklahoma City metro. Now, obviously, we are still in a seller's market, as denoted by our months of inventory sitting at 3.11. That is up 4% month over month, which is a pretty substantial increase over April, and it's a 16% jump year over year. But even with that climb, we are still well under the 6-month threshold that it would take to be a buyer's market. Anything for sellers markets is 4 and under. Between 4 and 6 months is a balanced market, and over 6 months of inventory, we are in a buyer's market. Now, even though we are in a seller's market, we are seeing more and more buyers that have some good positioning. You know, they're getting a lot of closing costs and concessions, and they have a little bit more ability to be picky based on what we are seeing in our market threshold. So just because it's a seller's market, don't think if you're selling your property that you can just list it wherever and you're going to get an offer. Our sold to list price is just under 100%, so down 0.6 of a point, and that just really is indicative that people that are listing too high are not getting their list price, but by and large, we're still pretty close. Median days on market is 18, which is down 14%. Homes are still moving quickly, even with that 14.3% decrease, so while more homes are hitting the market, the best ones are certainly being snapped up in less than 3 weeks. Prices, they remain strong. Our median sold price is up 2%. It's at a pretty healthy, steady climb. We are now sitting at $270,000, so pretty noticeable bump, and it shows that they're still willing to pay top dollar for the right property. So in summary, inventory is growing slowly, but so is demand. So if you are a seller in this seller's market, you are still in control. However, got to price right, got to show well. If you are a buyer, this is still a competitive market, but it's nowhere near as frantic as it was this time last year. Let's boogie on down to our median estimated property values. Median estimated property value. Now let's talk about values. Now, this isn't what homes are selling for. This is what they are estimated to be worth based on public records, listing history, or some sort of algorithmic model. Now in May, our estimated value was at just under $241K, which was a 1-point bump over last month and a 1-point bump year over year. Now, that might not seem like a huge leap, but that's kind of the point. What we're seeing here is very measured and consistent growth. No wild swings, no major correction, just steady, reliable appreciation. It reflects buyer confidence. People are still purchasing, lenders are still backing those purchases, and that is going to support value. So for sellers, this data can guide you how you position your home, especially if it is in a high demand area or if it's updated. And so for buyers, this will help you understand that if you are paying close to market value or, pushing above it based on location, condition, and size. So bottom line, values are rising, not rapidly. That's okay. We like steady appreciation. And in a market like ours, this kind of slow climb just tends to mean long-term strength, not short-term speculation. All right, on to new listings. Here we go. May 2025, we saw 1,587 new properties hit our MLS, which is 1 point month over month. It's a small bump, but timing is key. So May typically kicks off the most active stretch of the real estate year. So seeing listing activity pick up, even if it's just modestly, is very much in line with seasonal expectations. Our median list price at, $2 short of $300,000. In my opinion, that's right under that psychological threshold of the 300K. A lot of buyers may draw the line there, or pricing strategies that are favoring the 99 theory instead of going with flat round numbers. And one of the most aggressive growers, not showers in this category, is our median price per square foot. So we are now up 2.5 points to $170 a foot. This suggests that sellers are confident not only in price, but also in the value of the space itself. So this is especially relevant in areas where renovated homes or new homes are hitting the markets and they are commanding premiums. Our median home size has risen ever so slightly at 1/10 of a point to 1,842 square feet. Our total volume sits just over 634 million, also up about 2% month over month. Even though the number of listings didn't explode, overall dollar value is what's being considered here, and it's climbing. So that is a solid indicator of seller confidence. Yeah, so there we go. That's our new listings for the year. As you can see by all of these lovely handy dandy graphs, everything is right in line with our markets of steady appreciation, steady growth, and what we like to see in Oklahoma City. All right, so now let's talk about what is actually on the market. Our active listings. This isn't just what is new, but everything that is active in our Oklahoma City MLS as of the end of May. We had 2,835 active listings, which is up 4.1% over April. Obviously, that doesn't sound like a huge spike, but again, this is the highest inventory level that we have seen in months. And so it's a good sign for buyers who feel like they've been kind of squeezed out of selection. Our median list price jumped to just shy of $335K, so that is a pretty healthy bump, 4%. Sellers are getting more aggressive with pricing, and especially as we are heading into peak listing season. Our price per square foot is also climbing. We are up to 177. This, as well as the average home size of 1,930 square feet, up almost 2.5%. That combination is basically larger homes and higher prices. So this suggests more move-up inventory rather than quick flips or anything like that. Good signs for a healthy market. But this is the caveat. Our median days on market is now at 44, which is up just 2.3% month over month. So while there are more homes that are being listed at some higher prices, they're also sitting just a little bit longer. And now our total active list volume is up 8 points, which is almost 1.3 billion. That's a big jump, man. That is a ton of inventory in terms of value. And so it reinforces that sellers are aiming high right now. Obviously, this could also apply to a lot of the luxury properties that are north of 1 million that they just take longer to sell. You've got a smaller buyer pool that you are selling towards. And so, these are numbers, they're stats. All right, so let's talk about what buyers actually went under contract in May of 2025. So this is a strong indicator of market health leading into summer. We had 1,044 properties, down 3 points month over month, that did go under contract in May. So while the spring market is in full swing, buyer activity softened just a touch, which is all right. Our median list price had remained steady at 275, no change. You could see that as maybe a ceiling that buyers aren't willing to push through. So what did change is our price per square feet, which, at 160, it's just growing ever so slightly, showing market stability. And then our median living area, that had dropped about 3% down to 1,718 square feet. So buyers are paying more per square foot, but settling on slightly smaller homes. Homes are moving fast. Our median days on market were at 19, so 3 weeks for a pending contract is pretty damn good, especially in our market where, this number had been up to 44 over the winter. So I'm pretty pleased about that. For obviously the median of all homes, depending on your price point, you could be under contract in a day and you could be under contract in 2 months. It just depends on how you as a seller are presenting, how you're listing, how your whole strategy. So if you're curious about ways that you can get that number down, total volume for pending deals is just over 351 million, which is that's down 10% month over month. But our big picture is the $275,000 list price is holding strong. Buyers are active, but they are getting leaner. But if you're selling a well-priced, modestly sized home in the 275K range, expect quick activity. All right, let's look at the full pipeline. All homes that are under contract in May in our Oklahoma City markets. We had 1,281 properties that were pending, which is actually down 7% month over month. Overall buyer momentum might be slowing a bit compared to earlier this spring. Median list price rose slightly to $278K. Sellers are not backing off on price, even though pending activity has dipped. Our price per square foot jumped to $162 a square foot. I'll tell you what, let's look at the combo. Median price per square foot at $162, which is up 2.5%, to median living area square feet, which is at $1,739, which is down 2.5%. This points to one thing: buyers are paying more for less. Smaller homes, higher quality, or in stronger locations are getting contracts, even if there are fewer deals happening overall. But where we're seeing the biggest change is median days on market, which I don't like. I do not like this at all. So that is almost a 50% increase month over month. This basically suggests that buyers are taking longer to commit, shopping multiple options, or waiting on better terms before locking something in. And so this is one of those metrics that I had mentioned that, yes, while we are in a seller's market, buyers are not out there shotgun writing offers. They're much more laser focused on what they want. And, it's a seller's market, but we have seen, me personally, I've seen almost all of the contracts that I have written representing sellers in the last 2 months had some sort of seller contribution to closing costs, concessions, things of that nature. So don't go into the process of selling your home thinking, it's a seller's market, I'm going to make out like a bandit. You will, but in staying in line with market trends, you are probably going to have some sort of concessions to the buyers. Don't think that it's anything you're doing wrong or your listing agent is doing wrong. It's just sign of the times, baby. All of this is reflected in our total volume under contract in May, which is down almost 9% to $451 million. Pretty significant drop, especially when combined with the slower pace. Here's the takeaway. Sellers are still pricing with confidence. Homes are still going under contract, but it is taking longer and happening less frequently. So if you are a seller, it's time to sharpen your pricing and your home prep. And if you're a buyer, this pace may finally be tipping the scales in your favor. All right, so let's break down what actually closed in May. These are the sales that hit the finish line and give us a clear look at how the market actually is behaving. In real dollars, 989 properties had closed. That is up 10% month over month. Here we are in our little bitty outcropping of Crescendo, Michael Jackson. It's a solid increase from April. It's a strong late spring push, but it shows that the buyer demand is translating into real closings and real dollars. Median sold price is up also 2.2% to $270K. So another clear sign that buyers are still active. They're willing to pay as long as the properties are in good condition and priced right. All right, so our sold to list price has dropped down to 99.94%, down 0.1% over April. And, it's not a huge move, but it does suggest that buyers are negotiating, even if only a little. So this is the first sign in a while that shows that the needle is moving just a little bit towards a more balanced market. So here's something to watch though. Our total dollar volume is at $346 million, which is up a strong 15% month over month. So that's a lot of capital moving. This proves that the market is still highly active, even with some slight softening in a couple of the other metrics. So let's talk about bottom line. Boop, beep, bop, boop. Closings are up, prices are strong, demand is still there. However, buyers are still negotiating just a bit more and they are watching their value per square foot. So if you're selling, man, it's still your market, but it pays to be sharp. Let's talk absorption. Specifically, the month supply of inventory, which is one of the best indicators of overall market balance. In May, Oklahoma sat at 3.11 months supply of inventory, which is 4% up over April and a more noticeable 16% up year over year. So yes, supply is growing. However, we are still deep in seller's market territory, which again means anything under 4 months. So what's it all really mean? So this 3-month supply basically tells us that if there were no new homes that hit the market, we would run out of listings in just over 12 weeks based on the data. Assuming that demand stays the same, so that is still a very tight market, and it does give sellers a lot of leverage, especially on properties that are move-in ready and priced right. This month's slight increase in inventory also signals something else. More sellers are entering the market, and they're doing so very confidently. It could be timing with the school year. It could be strategic moves to cash out while prices are high. But either way, there are more homes that are available now than we have seen in recent months. But that said, it has not translated into longer sales cycles. So remember, the median days on market has dropped to 18? So supply is still rising, but demand is just absorbing it quickly. All right, so a takeaway. We are trending slowly towards balance, but the needle hasn't tipped quite yet. Sellers still have control. Just don't confuse rising inventory with falling demand. Buyers, they're still out there. It's just they've got a few more options to choose from. This is a card that I really didn't put a lot of credence into, but I got a notice from Ryan, I believe your name is. He was like, yo, thank yous for that. Nobody does that. I think that's a great metric. So Ryan, this is dedicated to you. We're going to wrap this up with our off-market slide. So this slide represents any deal that did not hit the markets in the traditional sense. It didn't go through the MLS. So think for sale by owners, think investment properties, think wholesalers. If you're selling your property to your neighbor and you draft a contract on a napkin, these are these kind of properties. Those are these kind of properties. In May, we had 570 properties that had sold, which is down a whopping 44%. Major cool down, and that likely reflects somewhat of a slowdown in investor activity, or just fewer large portfolio closings compared to the prior month. I close a lot of investor deals. I've got probably 20 doors under contract right now. It's hard out there right now for investors, and unless you're getting creative or unless you've got a good in with somebody who knows the market and can find you these off-market deals, it is not as easy to find any well-performing, cash-flowing deals that you once could in our market. All of that said, median sold price dropped to $220K, which was a 4.3% month-over-month decline. So it's not really surprising. Public record sales tend to come in far below retail pricing, but that drop still reinforces that buyers in this category are aggressively seeking value. I will say that most of the deals that I secure for investors are sub 200 because they're buying off markets, typically flips that they could then put in a $30 to $50, $70,000 rehab budget and then turn around and sell that at a proper after rehab value. The median sell price at 220 actually is a hell of a lot higher than I had thought that it would be. What else do we got in here? Our decline in price per square foot at 144. Basically, that in conjunction with our median living area square feet at 1,623 suggests that any sort of investors or off-market buyers, they've got more space for a lower price. So that's good for them. And our total volume, that's the biggest headline in this card. We are down 43% to $166 million. So this reflects both fewer transactions as well as softer pricing, especially in bulk portfolio or distressed deals. Our bottom line on this, man, is the off-market world pulled back hard last month. I can attest to that. I have had a hell of a time trying to find some distressed direct-to-seller flips or anything like that for investors, and I know that a lot of people have too. It's dry as a bone. Even though the off-market activity pulled way back, buyers still picked up more space, and they did so at lower values with fewer transactions overall. So kudos to you guys who are doing it. If you are working with investors, wholesaling, targeting FSBOs, this signals a return to very cautious deal making and not necessarily a feeding frenzy. There you go, Ryan. So there you go, the full breakdown of our May numbers for the Oklahoma City market. We've got rising inventory, we've got strong prices, and we've got a market that's still moving. So thank you very much for watching. If you found this helpful, we'd love it if you would subscribe. If you know somebody who's in the market, feel free to share this video with them. If you are curious about some of the pros and cons of living in our great state, you can check out this video here. And then obviously you gotta subscribe because you made it to the very end, so you can do that here. Be good to one another. Thank you.